And with these, we move to our next discussion on the KYC, solving the KYC conundrum. And we have, again, a very interesting lineup of speakers. We have with us already Markus Player, Deputy Director General at the German Ministry of Finance and former President of the Financial Action Task Force. We have Matthew Cicluna, leading the Maltese Financial Services Authority compliance team, Hartwig Gerrington from PaySafe, and Ksenia Duxfield-Kariakina from Google Cloud. We will also have joining us member of the European Parliament, Lucas Mandel, and he should be joining us shortly. So maybe we kick off the discussion already, and perhaps we start with you, Hartwig and Ksenia. Thank you very much for joining us. So this is the FinTech conference. We have been discussing new technologies, innovation, and of course there's a lot of potential here to facilitate onboarding and KYC procedures. So perhaps I will start with you on what do you see and what are you observing in the market on this side? What are your views? Maybe starting with you, Hartwig.
Okay, yeah, thank you. I was listening in a little bit into the conference. Congratulations already on it. It's really very interesting, and thanks for having me at this event. So yeah, I think it's true. There is a lot of good developments in terms of innovation, in particular in relation to the AML space and anti-money laundering, counter-terrorist financing. Also, fraud is all related in a way. And I mean, it may warrant a complete conference in itself, but for now, I'd like to maybe highlight 3 points. So one point is really around the customer identification and customer onboarding, and this is a point that is very close to our hearts here at PaySafe, but I think it's also a very important point in relation to the fintech sector altogether. And I think, from our perspective, the ability to onboard customers in a seamless way is really key. I mean, obviously, having a seamless customer experience is key throughout the whole life cycle of a relationship, but in particular at the start, because customers are often very sensitive to, every step in the process may mean that, a customer changes their minds, they may kind of drop and potentially not come back. So this is why I think every step in the process needs to make sense also from a customer's perspective. And that statement is particularly true when it comes to innovative fintech solutions, because every customer knows they need a bank account at some point in their lives. For fintech solutions, they are often used for specific use cases. So a customer is inclined to try it because they have read good things about them, because it helps them do a specific transaction, but they don't know yet. So I think in the past, when you look at customer onboarding, I mean, it was often kind of a very document-heavy paper is needed to be sent around. I can still remember when I opened my bank account in Germany with a bank that didn't have any branches. So I went to a post office to do my post-it. I had to go there twice because my signature didn't exactly fit. So, but I was prepared to do it. It took me like 2 or 3 weeks to actually get through this. Went to the post office twice. So I think it was maybe for that reason that the German Ministry of Finance at the time broke a little bit the ice and gave guidance that there is a face-to-face like online verification with video ident. And I think this was really the starting point of a lot of innovation in that space, where you have now all sorts of combinations of KYC with documents scanned on the phone and the app, and that's really working well. I mean, selfie, and so you get, and I think this is the point I'm trying to make here, the innovation does not make it simpler for the customer to actually enter into a relationship, but it also gives you much more information about the data about the customer from the outset. So whereas you compare it, let's say a customer going into a bank, I mean, you see the person face to face, which is great, but you don't know anything about the customer in terms of what the devices they are using and where they are in that typically, let's say. And so when you do that in a non-face-to-face environment, yes, you may not see the person face-to-face, but you already get at that point, information about maybe the phone the customer is using, maybe the IP address they are using, and all sorts of other geolocation data, for example, which may help you to kind of go into as the relationship goes on. And I think this leads me to the second point, which is transaction monitoring. If we look at let's say, let me be clear. I mean, if you onboard a customer, you only know who the customer is at that point. But in order to understand whether there is, any potential money laundering activity happening or terrorist financing, or even, if a customer is potentially falling victim of fraud, you may only know that once a customer starts transacting. And I think this is why the point about transaction monitoring is so important. And also there, I think it's really what we are seeing, that there is a lot of good innovation happening, really powerful tools to understand the customer behavior, the fingerprint of a device the customer is typically using, and the whole kind of pattern that you are able to identify. So I think that the other point about the transaction monitoring, which is particularly relevant in the field of fintechs, is, I said earlier, I mean, there's maybe a specific use case a customer wants to kind of do with a product. You see that there is kind of a very, very few, but very clear patterns of customer behavior. And that is a big advantage when it comes to transaction monitoring, because it's easier to identify, the kind of the pathways that people are using, and you see more easily detect people who kind of walk sideways and maybe do something else, which then warrants maybe a closer look. And this is, I think, the power then of a risk-based approach, where you are kind of getting comfortable with the mainstream use case, but then you kind of can focus your resources from a risk perspective on those outliers, and you look at them more closely. And then I think that's on the transaction monitoring. And then I think the third point I'd like to make is really on blockchain analytics. I think, obviously, crypto and this whole sector had a lot of discussion around this topic of crypto altogether in the past few weeks in light of the latest events. But I think if you look at the underlying technology and how it enables companies involved in crypto transactions to enhance their transaction monitoring capabilities, this is really impressive, and it can actually fit into the overall, let's say, AML framework of a firm as well. And just to give you an example there, I mean, typically, if you are a financial institution or a bank, you see the money that is coming in. You maybe have your view on what the customer typically does with the money and where they receive money from. You know where the money is going. If the customer sends it to someone else, and you have a view on whether that's good or bad from your risk perspective. But it ends there. So if you have a transaction and you send, let's say, a crypto asset into a crypto wallet, which is not controlled by yourselves, then actually you are still able to go back go back to the same wallet, let's say in 7 days, in 30 days, or in a longer period, just to see what happened to the crypto asset that was sent to that crypto wallet. Is it something that was used for an unsuspicious transaction, or was there any accounts linked to it potentially that give rise to concern? And that would enable you to kind of enhance your picture, plus also the ability to really set off a meaningful suspicious transaction report if that was the case. So I think these are the 3 points I wanted to make in that respect, and I pass over to Andrea. Thank you.
Thank you. Thank you very much, Hartwig. No, that is very interesting on how we can use the technology for transaction monitoring, analytics, and more this customer relations life cycle point. Perhaps before I pass over to Ksenia, just in leveraging on the technology to encourage our audience at home to use the Q&A chat function for any questions you might want to pose. But with this, Ksenia, perhaps more from your perspective, from the technology service provider, what are you seeing in the market at the moment?
Thank you, Andrea, and hello, everyone. It's a pleasure to be here. Thanks for having me. I head up Google Cloud Government Affairs and Public Policy team in regulated industries in Europe. And my team works very closely with our customers and with the regulators, especially in the areas of where technology can improve specific regulatory and compliance and reporting elements. Before Google, I, interestingly for the discussion, worked for many years within the FATF system, and I worked both with the FATF organizations in Europe and in Asia Pacific, but also with financial intelligence units. So this topic is very close to my heart from my previous professional experience as well. What we see when it comes to the use of technology, first of all, I think it's we cannot underestimate the volumes of money laundering that are happening each year. And I'm sure that we will talk in more detail about this within this panel, but according to the UN analysis, it's between 2 to 5% of global GDP and up to 2 trillion annually, $2 trillion US annually, which we're seeing in money laundering. So this is a large-scale global problem. And increasing digitization supercharged digital transactions, especially during COVID, which means that it brought a lot of positives with the automation and increased digitization of the sector, but at the same time, increased digitization of money transfers also brought new challenges with the money laundering issues. And the nature of criminal activity is changing all the time, which I'm sure panelists would agree is changing with the behavior of the criminals who are very experienced with circumventing regulatory approaches and known patterns and known detection measures that we have within the industry. And I think one of the challenges that is useful to talk through today is many of our existing methodological approaches are rules-based. And these rules-based systems are very easy to circumvent and game for the criminals, and they are returning a vast volume of false positives. According to some analysis, we are seeing more than 90% of false positives when it comes to reporting suspicious transactions from the industry to the regulator. So with this issue, we see a lot of promise on the use of the technology in the space of cloud technology, AI, and machine learning in particular. We see a lot of promise on how the implementation of better data analytics, machine learning tools can really improve how we address the problem at scale and move from patterns and old rules-based systems to AI-enabled AML approach, which will, on the one hand, able to develop a more sophisticated analytic lens, which will provide institutions with ways to detect new patterns and anomalies that might normally bypass simple rules-based systems. And at the same time, we are seeing that these AI machine learning engines can be trained to improve accuracy, reduce false positives, help banks better perform internal risk assessments, better determine when, amongst millions of these legitimate transactions, and whilst they're being processed, how bad actors could circumvent rules-based systems. And AI can further help contextualize the signals and generate more targeted flags for the investigators on the industry side, and can also help improve how these processes are organized within the regulators and financial intelligence units. So that's where we're seeing a lot of promise in terms of how the technology can help. And what are the key areas? What are the key problems that we think that technology can help address when it comes to improving predictive analytics? First of all is the quality of data and breaking the data silos. That remains a big challenge for financial industry at large and for the regulators, but specifically in this context, we are seeing that the investigators spend a lot of time, the vast majority of their time, in fact, gathering data, analyzing counterparties. They need this complete data to be able to act, to determine where we need an escalation or a closure. But these extra pieces of data can only be captured in reality for a small number of customers. So how do we address this problem at scale? How do we help with moving just from understanding typologies to dealing with more sophisticated issues like shell companies and trails, and understanding the connection between different actions? So breaking these silos is key. And then improving the data quality, improving the availability of quality data. In the end of the day, what we are working on is to produce better machine learning technology to address these issues. Machine learning algorithms will need high quality data. So that's one issue which is very important. Another one is prediction accuracy, and that's what I mentioned in the very beginning. We are seeing that the rules-based systems return a vast amount of false positives, and then these false positives will need to be investigated manually, and that requires a huge amount of manual labor. And that brings me to the third problem. The third issue is costs. These false positives are very costly because they require talent to be focused on these manual transactions, manual tasks, without prioritizing more important tasks and more comprehensive tasks. So these are the areas where we're working with our customers to improve these processes with the help of AI and machine learning.
We lost her there. So I'm going to take advantage of that, for lack of a better word, and pass to you, Lucas Mandel. Thanks for joining us. It would be really interesting, as we've had two industry speakers setting out some of the technological innovations and possibilities that brings for AML compliance. But of course, you were one of the key negotiators on the recent financial transfer regulation, which implements part of the FATF recommendations, changes to one standard in relation to crypto assets. And I think crypto assets is another good example where the use cases change, the way Financial Services Act changes, and therefore also the AML requirements change. Maybe we would like to elaborate a little bit on that, and also in the light of the bigger framework that's going through the Parliament at the moment on AML and the creation of an anti-money laundering authority, what learnings you've taken from the discussions on the transfer regulation that could be applied to the wider AML framework when it comes to the use of new technologies. And it's good to see Xenia back. We're relieved. Good. Over to you, Lucas.
Thank you very much. Thank you for having me, and thanks for this event today. I'm here in the first place, frankly, to listen and to better understand the insights in the sector and in the industry. Actually, we're still in ongoing negotiations when it comes to anti-money laundering. And of course, the money transfer regulations are of utmost importance. And you have asked me recently what my lessons would be from this. I would say at the same time a lesson, and also, let's say, my claim, my meta message, so to speak, is that money remains a state's responsibility. And I say that as a person who is very stick to, I would say, a generally liberal approach to states' responsibilities and the private sector and opportunities and free choice and individual freedom and so on. But money is clearly something, as security, for example, the state level of what kind ever has to take care of, meaning also on the other side that money can't be privatized. And this, let's say, this sounds very theoretically or philosophically, but in fact, due to crypto assets, one or the other could have the impression over the time that through the back door, so to speak, privatization of money could have happened and could happen. And this is something we should avoid, because money is, I would say, a kind of trust and let's say a materialized exchange of confidence, and this is what our societies need, especially in these times, and this is why it should remain a state's responsibility. Generally, in my opinion, a legislative body must always strike a successful balance between innovation and safety. It must be our aim to create a maximum of space for innovation and developments, specifically in the financial sector. On the other hand, the incredibly fast development in the financial sector also brings new dangers for the citizens of the Union and our security system in general. It is our duty as the European Parliament to ensure the security of EU citizens and other institutions. As mentioned, our aim is to create maximum space for innovation, especially in the sensitive field of the financial area. It is often difficult to find the balance. Many people do not understand the terms and the content and are therefore frightened by change. Through transparency, we can ensure that people understand what those regulations mean and what they achieve. It is important to regulate the financial sector in order to keep control over terrorist financing and money laundering as much as possible. Unfortunately, where money is involved, greed and the willingness to commit crime are very quickly associated with it. However, it must be understood that financial institutions are our partners here, not our enemies in fighting those criminals. This is clear for a vast number of parliamentarians here in the European Parliament, but of course we also have to fight some suspicion, ideological approach, and so on. Particularly in the area of financial services in the EU, must be careful not to over-regulate things and thereby fall behind other countries. This also contains the risk that more and more tech companies will outsource their headquarters and activities, and that we will fall behind as a result. The European Union is a very attractive market for financial service providers and should remain so. In the past decades, the EU has repeatedly managed to adapt to technological progress through progressive, intelligent, and liberal legislation. Financial services form an essential part of the EU's efforts to complete the internal market. Under the free movement of services and capital, progress towards integration has come in various phases. You might be more aware of that than any legislator could be, but it began in 1957 already and led to the global financial crisis and post-crisis reforms then from 2007-8 onwards. The digital and green transformation has brought additional opportunities and also challenges for financial services policy. The withdrawal of the UK from the EU brings a new set of challenges with potential implications for the financial services sector within the EU and beyond. The current focus is on the addressed areas of anti-money laundering and anti-terrorist financing regulations, in particular the new challenges that the introduction of cryptocurrencies has presented us with in recent years have required an update of the current legislative framework. In this area, we must pay close attention to the specifics of cryptocurrencies and see that we consciously and individually address them. We also need to make sure that the new authority that will be introduced, the AMLA, is precise and purpose-driven. Over-regulation harms the fight against terrorism and money laundering by diverting focus and financial resources from the important things we have just heard in the other contributions to this very event today, that more than 90% are, let's say, zero result mentions if there is scrutiny, and scrutiny costs money. So we have to be more focused here. We also need to be careful that the revision of the legislation does not bring back issues that have already been agreed upon and have been successfully implemented. Both companies and customers must be able to trust the European legislator, including the continuity of its regulations. So this is the approach. It seems important to me to always see the customer side, to see the industry side, and also to see the security side. But we have to target the criminals, the terrorists, also the hybrid warfare wagers from all around the world, not that much the regular customer. And one of the main purposes of all the legislative endeavors here will be to ensure to distinguish the one from the other. Thank you again for having me.
Good. Thank you, Lucas. I wanted to perhaps take one thing you mentioned, which is this balance when we look into innovation, which also alludes to what Hartwig mentioned on the risk-based approach. And with these, maybe I pass over to you, Marcus, on how do you see, from your perspective, how the EU is going around adapting its framework in light of these new technologies. And of course, here feel free to make the link as well to the work that is being conducted at the FATF level.
Thank you for having me. It's a pleasure to be with you. So you're heading towards the regulatory framework for technology. I think here we have to have in mind that we always need to be technological neutral. So when we, for example, look into the European regulation that is currently negotiated, you would not find any specific technology or a specific company that is promoted for example, video identification, but we need always to have a regulation in place that is open. I think we see a different speed between the criminals on the one side, the technology that is developing very quickly, and regulation, which is by nature always slower. And for that reason, we need to have open clauses for these technological developments. So if I may take one example, and that is also linked to my work at FATF. In FATF, I have pushed very hard for a better information sharing. And this information sharing always was impeded by data protection concerns. And I think the technology provides a solution for reconciliation of for reconciling on the one hand data protection, on one other hand a more effective AML. In the European regulation negotiations, we have pushed for an opening clause which will permit countries to do an information sharing also between banks. Currently, it's only permitted between a banking group, but for example, in Germany, Commerzbank and Deutsche Bank, they are not able to match their data. But it's very important to do that because criminals misuse the information gap that currently exists. So there is a kind of regulatory arbitrage that we know also from financial services. Criminals do the same. They split their transactions. So we need this information sharing. That will be really a game changer. And the privacy enhancing technologies or the data custodians or migrating algorithms allow us to match the data while at the same time protect the high level of privacy and data protection. So this is something where the regulator, I think, is now moving into the right direction. This is at least the council proposal. I'm happy that Lukas Mandl is today with us because this is now something that has to be negotiated in the trilogue with the European Parliament. And I can only repeat, if we, in the end, use this chance of the new European regulation to open it up for better information sharing, this will really be a game changer in AML and CFT. Maybe another point is outsourcing. I think regulation should be very open for outsourcing. When we received the first Commission's proposal in summer 29, the Commission was very restrictive on outsourcing. But if you look around, usually it's not the big banks that develop their technology. It's usually third parties, highly specialized companies like we have here today, who offer the excellent solutions. And if it's not permitted for a bank to outsource this service, then I think we would be not able to keep up the pace with the criminals when it comes to using digital tools for AML. So we pushed very hard here together with Denmark and with the Netherlands. And in the council proposal, we have now a much broader possibility for outsourcing. And hopefully this is something that will keep even after the trilogue with the EP and in the final law that comes into force. And maybe a third point, I think, which is very important, is if we use technology, is to have very clear rules. I very often hear that this is a wonderful technology, but we are not really sure we can use it because it might infringe with data protection or data documentation. So to get rid of these concerns, we need a very clear legal base for the users of the technology so they can really use the full potential of technology when they apply it to AML. So far from my side.
Maybe let me take a question which goes to everybody, and I will bring this to Matthew as well, which is based on this first round of interventions. It's really the question around the risk-based approach. I think, Marcus, you raised different examples around this already, how supervisors and regulators can be more flexible. And we've heard about the overload of information and being more targeted. Maybe I can start with you, Marcus, in looking at the design of the FATF framework, which does recognize a more risk-based approach, and when it comes to the European framework, which of course needs to look at a single market approach, and therefore ideally lead to maximum harmonization. How do we square the circle between a risk-based approach and harmonization?
Yeah, that's a very good question, and you put your finger into the wound when it comes to the relationship between FATF and the European Union. I think the FATF not just recognize the risk-based approach, I would even say they, if not invented, but they globally promote the risk-based approach. And this sometimes conflicts with the European concept of maximum harmonization, for example, when it comes to PEPs, politically exposed persons, which have to be always regarded as internal PEPs within the European Union, but the FATF requires, as once you cross the border, that they are from a third country, even within the European Union. So there are certainly conflicts. On the other hand, the FATF is a big project of harmonization. Suppose for a moment we hadn't FATF, then we would have perhaps harmonized AML law in Europe, but not globally. And every region would have completely different ways of approaching anti-money laundering. So for me, FATF has always been a global harmonization project, and it's quite successful because it's not only setting standards quite flexibly so that you can adapt it always to the specifics in the region, but it also looks for the implementation, not only the implementation of the standards into laws, but for the application on the ground. And for that in that regard, I think we globally have a very harmonized AML in the world. Of course, in the EU, we have the wish to be even more harmonized. This is why we are now setting up this AMLA that was mentioned by Lukas Mandl, because we also need to look not only for having the same regulation and the same directives, but they must also be applied in all countries the same way. Currently, although we have the fifth or sixth directive, we still see different frameworks when it comes to KYC, when it comes, Hartwig mentioned the video ident, which is permitted in Germany, and in other countries you can even go with photo ID. So you have a very disparate regulatory landscape, and we look even now more for more harmonization with a first-time regulation which makes law directly applicable in all countries, and with AMLA we make sure it is applied consistently everywhere. So I think there are still some conflicts between FATF and the European Union, but I think with this next step that the European Union is now taking with the regulation and with the AMLA, we are coming closer to what the FATF is requiring. And the FATF will be able, I'm quite certain in the future, to recognize the European Union as one single jurisdiction, which they currently don't. But once we have one rule and one supervisor to implement the rule, I think the FATF will recognize the European Union not as 27 different jurisdictions, but as one jurisdiction. And the next step will be whether they recognize us as one area with the same risk. And that will be a challenge, because that, I think, is currently not the case.
Yeah, I look forward to that, because we don't have that even for the US, which is causing us certain headaches, as you know very well. But thanks for that. Hartwig, just 1 minute in senior. Any thoughts on the risk-based approach? I think, Hartwig, you're experiencing that on the ground day by day.
Yeah, thanks, Nick. I mean, obviously, very interesting comments. I mean, from on the point about outsourcing, I fully agree. Just to be sure I said that, because it's really key to understand that today's world is not working in a way that everyone is doing their own little thing, and it's certainly not the most efficient way of doing it. That way. So you need to outsource to specialist companies. Only by doing so you can actually get the latest technology. And from a company specializing in transaction monitoring, building your own transaction monitoring would work, yes, potentially, but you would always be 2 steps behind, not only 1, and that is really key. I think when it comes to the point about overregulation, I think one comment I really want to make, and that's the next question. I think in Europe, we have been super successful. We can give ourselves a pat on the shoulder for the last 15 years of European regulation in terms of e-money and AML as well. And that led to a lot of a growing sector on e-money, a very diverse sector of e-money products. So you have all sorts of different products in that same sector. It's almost difficult to say, well, you have one risk assessment for e-money, because all these products are so different in itself and with different risks and so on. So now I think when you look at where the regulation is going, in particular on certain products which are maybe more niche, there is a certain concern of overregulation in Europe. And there's a real danger that maybe to Luca's point, that we are potentially falling behind what we see in other markets. And I would just take one example, which I think is really key. So the European market for regulated gift card products, so e-money products, gift cards and prepaid vouchers, was and still is super and highly innovative. So it helps businesses to grow, it helps customers to pay in a secure way. It oftentimes also enables access to specific payment products to fulfill customers' specific payment needs in the most efficient way. And many of you may have used a regulated gift card, for example, when for a birthday present potentially, or for a Christmas present, without really noticing. And so the reason for the success of these products was really the European legislation on AML, and the fact that there was an exemption and still is an exemption for those products that allow low value, low risk payments, and the limits in Europe are already very low since the last iteration of the directive. So we are talking about 150 euros for offline use. So you buy a card which can be used, for example, to buy some shirts in a shop or whatever. It's still or books in the Netherlands, very prominent example. It's a regulated product, and you don't have to identify yourself at the moment, because there is this exemption up to 150 euros, and for online use it's 50 euros. So now the latest proposal of the European Commission does not foresee this exemption anymore, and this is causing obviously a massive concern amongst the prepaid industry, and interestingly, not only between the providers of the specific products, but also about the merchants. So the merchants are concerned as well, because these type of products were driving new customers to their, specific offerings, enable them to buy something online maybe, and that is really key. So there is a clearly wide concern that we are potentially losing those benefits. And if you look at that from an international perspective, we kind of indeed, if that really goes through, falling behind, because we see in the US, in Latin America, in Asia, there is a number of markets where this is absolutely equally successful as in Europe at the moment, but there is no discussions around, establishing additional verification requirements for customers wanting to use that product. And I think, we would all be, also from our perspective, if we do a reality check on how we would feel if you get, let's say, a gift card for Christmas, and then, you need to upload your ID and do a selfie and maybe a video call in some countries in order to be able to use that prepaid product. So this is just one very specific example, but I think a very important one, and I didn't want to miss the opportunity to mention it. Thank you.
So we figured it was a bit more than a minute, but anyway, Matthew was very patient, because I'm conscious we're well over time, but that shouldn't go at the disadvantage of Matthew. So Matthew, I'd be interested just to hear from your side about how you use technology from a supervisory perspective, and also the risk-based approach. We might have to make it a bit shorter, because I also want to give Lucas the final word. I always give the elected representative the final word. I think it's only right in a democracy. But with that, over to you, Matthew.
Just in a nutshell, also speaking from an MFSA perspective, so obviously it's public knowledge that the FATF actually strongly supports responsible financial innovation, which is actually in line with the AML-CFT requirements found in the FATF standards, and also will continue to explore new opportunities when it comes to financial and regulatory technologies, which may present and be present for improving actually the effective implementation of AML-CFT measures. This goes in line also with the efforts conducted at European level, also when it comes to the adoption of the 6th AMLD, together also with a proposal for a recast when it comes to the transfer of funds regulation, on which there's already an agreement in principle reached by the European Parliament, and this will form part of the new AML rulebook once adopted. These rules also will be extended into the entire crypto sector, and will be obliging all crypto assets service providers, known as CASPs, to conduct due diligence on their customers. This means that they will have to verify the facts and information about their customers, obviously, both at onboarding stage and also during the ongoing life cycle of those particular customers. When it comes to Malta, very briefly, we had adopted legal notice 430 of 2018, which extended the application of the PML-FTR to activities regulated by the Virtual Financial Assets Act, the VFA Act, rendering VFA agents, VFA service providers, and any other providers offering VFA to be subject person in terms of the Act and regulations. Hence, meaning that if they are subject person, they need to comply with the AML-CFT requirements arising from the inter alia of the PMLA and the PML-FTR, which is the Act and regulations governing prevention of money laundering. In Malta as well, the Maltese FIAU, being the AML competent supervisor here in Malta, has issued the implementing procedures part 2, focused on virtual financial assets. And this guidance is aimed to create more sector-specific guidance in terms of AML-CFT vis-a-vis the subject persons. Then we have also the adoption of MiCA. This was also embedded in the MFSA's AML-CFT strategy, and the VFA framework itself has actually embedded requirements to enhance the AML-CFT regime in Malta, and also the MFSA has procured blockchain analytical tools which will help us allow and monitor these VFA service providers when it comes to transactions undertaken vis-a-vis license holders. Also very briefly touching base on the regulatory challenges that we as supervisory authorities are encountering vis-a-vis new technologies, having, for example, required clear support from the competent authorities for innovation of AML-CFT. I need to stress that the lack of support, if we lack support, obviously, it will impede us from actually functioning in the right manner and obviously adopting new technologies when it comes to us supervisors in monitoring such tools. Benefits, when it comes to benefits, obviously there's increased transparency and trust among customers, having less on paper money laundering scams, reduce less legal risks, and increase also market stability. But in a nutshell, focusing on three main points: adaptability, automation, and data security. Obviously, having a KYC solution which is customizable can be adapted to the specific needs of that current business, and obviously the need depending on the business model of that particular licensed entity. Automation, using automated KYC technology and crypto companies can obviously help us achieve as a jurisdiction key goals, such as reaching users in new markets quickly, comply with local regulations, adapting to new markets and languages, and building trusts among other counterparts. And finally, data security. Data security in all KYC and crypto matters it's a very important topic. Any system also needs to maintain user privacy and ensure that information and documents are only accessible by authorities. Hence, stressing the need of the importance of having new technologies going hand in hand with current practices and requirements at a national level. Thank you.
Thank you very much indeed. And Lucas, apologies for the miscommunication. Now, definitely the final word to you.
My team and me have made a lot of notes on today's event and also on format discussions in order to figure out what exactly to do to achieve the objective, which seems to be really important for the common good, the so-called common good. And this is to fight the misuse of money in a way that the use of money is as much possible and as easy as it can ever be. Because both is important, the use of money as well as to fight the misuse of money. Maybe this is the overall endeavor we have to undertake here in our legislative lawmaking activity, and this is why we need your recommendations, your expertise, the insights in practice from your side. And I thank you for the ongoing outreach, and I'm always available together with my team for your recommendations or ideas, and also critics, of course, of whatever kind you might have. Thank you again also for today's event.
Thank you very much. Good luck, good flight. I think thanks to everybody. I think we covered a lot of issues and there was a lot of consensus. We should have made this session much longer, but it's the challenge of a two-day conference. As Hartwig said, we might have a separate seminar conference on some of these AML issues. It certainly deserves it. But thanks to everybody, and good to see the link between analytics, between risk-based approaches, development of new products, and balancing harmonization and kind of pragmatic approaches.